All right, Taberne Talks. Let's go. Another episode here. If I seem a little bit off today, I am recovering from the effects of the Eagles parade yesterday. It was definitely all that it was worked up to be, plus some. I was telling George and a lot of people that the weather was definitely a factor yesterday. I'm getting old, man. I mean, this cold weather sets into my bones after a while. So I think after the first hour, I started feeling the pain, and at 3 hours, I was begging to get out of there. But it was fun. Congrats to the Eagles, champions. Maybe we won't have to hear the chants anytime today. I never heard so many chants in my life yesterday. I was actually sick of it by last night, and for me to say that is insane. But I never heard so many chants in my life. So congrats to them. We're going to go back to business now, right? I always say every year after the Super Bowl, we go off to the races, okay? So it gets busy now. And I already started to see that. And so shout out to all the realtors and the loan officers that are still in the business right now, that have stuck it out and are working even through the weather changes that we have every other day here. And the market changes that we have every other day. This is it now, right? I always say the Super Bowl, a little lull after the Super Bowl, which is today. I even tried to get a few people to come on the show today, and everybody's dead, right? Everybody looked at me like I'm nuts. Like, you're asking me to come on the show the day after the parade, after the week we've been through with the Super Bowl last Sunday. So you're right. I took a break. I leave them be, and we'll move on to them as we get further into it. But this is it now. Like, I started getting busy the last 3 or 4 days. I could already see it leading up to the parade. And now, as we get through this weekend, I'm seeing a lot of open houses pop up, a lot of activity with realtors, doing open houses, a lot of loan officers starting to come alive a little bit to say, listen, we have these programs and have that program. You got to stick to it now, right? You have to get a plan now. I'm even trying to get a plan, with Anthony and myself. And as we move through Movement, I'm in my second month at Movement. I'm very happy on the decision that I made. They've taken care of me. The management from top to bottom has been top notch. Service has been on the money. I've closed a number of deals already through January. I have a number of deals that are closing in February. So it's all about the process, I think, and it's all about who you work with. And I always pitch, work with a local lender, work with someone that you know. And the good thing with Movement is they're hyper local in these different neighborhoods, right? Like South Philly, we have a branch there, and and the guys are all well known there. And I think that's why I went with them, is because they have such a good reputation in Philly, and we're building the Jersey market now. So I think that we're going to see things start to pick up, definitely by the end of the month, going into March, into the spring market. It's getting lighter out later, thank God. Yesterday was still light out almost at 5:30, 6 o'clock. So things are definitely looking up. So hang in there. There's a few things I want to touch on this week. Nothing crazy, but things that I see every week that I try to get out to you guys, whether I have a guest on or not. I'll try to sneak it in if I do have a guest on. Number one, I think I'm being questioned a lot on, what is the fees on a mortgage, right? And are these normal, right? So listen, you get your estimate of fees from your loan officer, and your loan officer usually goes over those fees with you. If they're not, it's a problem to begin with. Okay. You should be consulted on what you're paying. But I think the question lies in, are the fees legit? Right. So lender fees are all different from every avenue, right? Working with one company, they could be charging one fee, and another company could be charging another fee. Okay. There's usually a certain threshold, though, that they have to stay in, right? If they quote you lender fees up front of a certain amount, they have to be within 10% usually of those fees when we go to closing. It can't be something dramatically higher, or they won't allow you to close, right? You literally have to redo the fees and start over. I'm getting questions on title companies. Title fees, are they normal, right? Lender's title insurance, owner's title insurance, should I pay it? Should I not pay it? Title company fees are they are regulated, right? So No title company is going to charge you $20,000 for lender's title insurance, and then another company is going to charge you $5,000 for lender's title insurance. That's not going to happen. They're regulated. Okay, so you're not going to get a big spectrum of different fees when it comes to that. Owner's title insurance is an added protection for you on top of the lender's title insurance. It says optional on there. I always say, get with the title company, find out, do you need to pay that? Should you pay that? And they'll really go to the backgrounds of why there's owner's title insurance on a property. But lender's title insurance is definitely needed. It's regulated. It's no fee that they just throw on there and they're pocketing. They're protecting your title work, and it goes for the loan itself. So if you ever go to refinance or sell the home, you have clear title and there's no issues. Escrows are escrows, people. A lot of people fighting us on, well, I'm paying 5 months of property tax up front. Why? I'm paying 1 year of homeowner's insurance up front. Why? You got to pay escrows if you're escrowing for your loan, okay? The mortgage company is going to collect a certain amount of property taxes up front. They're going to collect a certain amount of homeowner's insurance up front, usually 1 year of homeowner's insurance, usually 5 or 6 months of property taxes. It is what it is. There's no negotiating. The only way out of your escrows is if you put 20% down and you say, I want to pay my own title or my own escrows. I want to pay my own taxes. I want to pay my own insurance. Then you do it on your own. But if you're not willing to put 20% down, you got to go at what the mortgage company says. And it's not the mortgage company saying, hey, I want to charge this guy 6 months of taxes. No, that's what's due. That's what's needed to be put into your escrow account so that you don't get nailed with a bill next year. Right? Every year, the tax bill and the insurance bill comes in and it goes to the mortgage company. You don't want to get a phone call or something in the mail saying you owe the money. It comes out of your escrow account that you built in up front. That's why they're collecting all those fees up front. Okay. So it's really no negotiation, and you got to stop. Listen, there's just such a bad rap with mortgage reps that, they think that they're charging people escrow fees that is not charged by me or a mortgage company. It's charged by what is due at that time in order to cushion your escrow account. It's not because we just want to nail you with an extra fee. Okay, we don't get off on that. The only fees from a lender that you might see, are points and things like that may not need to be there or negotiated up front. Okay, so that was a big one. It seems like, the volume slowed down in January. So we got a lot of questions on why am I being charged this? Why am I being charged that? Nickel and diming. And once you start nickel and diming, it gets ugly, because you know what it is? Me as a mortgage professional will explain to you what those fees are and why they're charged. And you have to trust me. Okay. You have to trust what I'm saying. I'm not in it. I've been in it for almost 30 years now. I'm not in it to just say I want to charge this guy, a $5,000 lender title insurance fee. That's not even my fee. That's a title company fee, which, yes, they have to charge it. There's no negotiating there. Okay. So just trust who you have. And that goes back to being with a local lender, right? Somebody who you've gone online, you looked at their reviews, you see that they're a good loan officer who knows their business and people like to deal with. The realtors like them, so you have to go with that type of person. But then once you make that decision to go with that person and you feel that you've done your homework on that person, then you got to trust them. You got to trust what they're saying, or there could be a fight the whole process. You don't want to be fighting from start to finish, because the mortgage process takes 30 to 45 days to close. Okay. So that's one. Another one I'm seeing. Okay, so seller concessions to buy down points. Okay, I have specific scenarios that are coming out where the appraisal on a house appraises higher than what the contract price is. Okay, so let's say you're buying a house for $300,000 and it appraises for $310,000. It comes in $10,000 higher than what the price of the home is. In that scenario, you are allowed to build a seller concession into the loan, right? You can bump the purchase price of the home from $300 to $310 because it appraised for $310. Okay. Now the seller has to agree to that. You can't just finance closing costs into a loan. The seller has to agree to say, yes, I'll allow them to bump the purchase price an extra $10,000. That way they can get $10,000 back towards their closing costs, or to use to buy down their interest rate, because the interest rates are so high right now. Remember that. They're not the best. Even I'm going to say that they're high right now. You got to work with people and allow them to get the seller concession if the home appraises for more. You're still going to walk away with the money that you originally negotiated on the contract. You're not losing anything. The thing is that you're helping a first-time buyer. You're helping someone who maybe has a big family. They're squeezing into this house, affordability issues on every single deal that I'm seeing. You gotta allow them to get that concession if the home appraised for more. Let them get the money back. Okay. That's going to help their rate. It'll buy down the interest rate. It'll help them get a lower monthly mortgage payment, and it's no sweat off your back. You know why it's no sweat off your back? Because you're still getting the amount of money that you were negotiated up front. Okay. So a lot of seller concession questions are coming up. Can I use them to buy down the interest rate? Do I have to use them just for closing costs? Points are closing costs. Okay. So that is closing costs. So yes, you can say, you know what, the $10,000 I want to go to straight points to buy down the rate. And then on the flip side, I'll pay the title costs. I'll pay the escrows and everything out of my own pocket. Okay. So that's a big one there but there's a lot of people that don't understand the concept of the home appraised for more. You're allowed to bump the purchase price and build the closing costs into the loan at that point because you have built-in equity in the property. Okay. So moving on, Fannie Mae just released that you can now get an appraisal waiver with 10% down. Okay. It used to be, let me take you into appraisal waivers. An appraisal waiver is we run your file through the system. The system tells us this property is eligible for an appraisal waiver that you're buying. Okay. It used to be big time in the pandemic. Like every deal that I was doing was an appraisal waiver, right? They were doing 20% down. They were refinancing. They had all this equity in the home, and the system would say, we don't need an appraisal on this house because either they're putting a lot of money down or they have a lot of equity in the property. We'll take whatever the system says as an estimated value. We'll do our homework behind the scenes, and these people don't have to spend $600 for an appraisal, and everybody's happy. Okay. It used to be the benchmark, at least 20% down. I started seeing deals where it was 30 and 40% down. And now, still doing some of that 20% down. But now they're trying to loosen up this market a little bit and get more people buying and help out more people. So Fannie Mae came out and said that we'll allow appraisal waivers to happen with 10% down as long as the system allows it, right? And the system, what I mean is it's called desktop underwriting. If you don't know, desktop underwriting is what every lender uses. They run the system, your file through desktop underwriter, and desktop underwriter will come back and say, yes, based on this person's credit, based on the amount of money they have in the bank, and based on them putting 10% down, we'll approve the loan. They'll get the appraisal waiver and we're done. Okay. That just saved you $600. That saved the seller any headache that the appraisal is going to come in low. That saved us timing. We don't have to wait 2 weeks for an appraisal to come back. So we probably could close a lot sooner now because we don't need an appraisal at all. There's lots of pluses that I'm seeing with these appraisal waivers, but it's not guaranteed. I used to have, realtors or clients calling me saying, Alex, I'm putting 30% down. I should get an automatic appraisal waiver, right? Now, there's nothing automatic. Right. And no matter what you're putting down, we still have to run it through desktop underwriting. Desktop underwriter still is going to dictate what it is. Can we waive the appraisal? Can we not? And if we can, great. And if we can't, we have no power to just override that and manually say, I like John. John gets an appraisal waiver just because it's John. It doesn't work that way. Okay. It's an automated situation. Hopefully you'll get it. If you don't get it, oh well, there's nothing that we can do about it. We move on. So that's a big one there that I think it goes in. I think it's in effect now. I'm going to double check the guideline. Somebody told me February 24th is when it actually goes into play. But I'm getting some conflicting info that actually, if you run it through desktop underwriting now, you may get the approval now, even before February 24th, which is great. We need it at a time that the market is really begging for anything new. Like we need these types of things to loosen up, okay? So that we can get more people back into the market and, maybe help sellers say to themselves, okay, I'll sell my property because I know that the chances of getting an appraisal waiver are now greater. So I don't have to worry about the issues of my property appraising lower because, the buyer may get an appraisal waiver. Okay. So that's a big one there. Okay. So let's get into credit. I always try to tell you guys the credit tips that I run into every week. Credit is big. I run credit on every deal. I've been running credit all week again. It seems like every other deal, a credit report is good for 120 days. Okay. When you run a credit report, it's good for 4 months. After 4 months, we have to update your credit, and then it goes for another 4 months. Unless you close on a home within that 120 days, then we don't have to run it. I'm hearing horror stories of people telling me that some of the lenders that they're dealing with, again, I'm not going to name names, are pulling their credit every single month while they're in process. Why are we doing this? Why are we running someone's credit after we ran it 30 days ago? That credit report is good for 4 months. If they're closing in 30 to 60 days, why am I running their credit again? I'm going to tell you why. This is the tip of the week, okay? They're running your credit again because they want to see if your credit score got up so that they could give you a better interest rate or make more money on your interest rate and you don't even know it. And that is the truth. I'm not putting down loan officers that have been doing this for a long time or are legit. I'm talking about the guys that are a little bit questionable and are running credit behind the scenes just to gain an extra dollar to their name. Okay. That is not, but you might listen, it backfires. And I'm going to tell you how it backfires. And this is why I wanted to bring this up on the show. You might run their credit in 30 days and they didn't even know. And their credit score goes down dramatically. Okay. And then you try to go back to the original report that you ran. And sometimes I'm seeing some of these companies be so tight with underwriting that they're saying, no, we saw you run the new credit report. We're not going to honor the old credit report that you ran 30 days ago. You're now going off the new credit score. And these people no longer qualify. Or their interest rate's going to be a lot higher now because you never locked their interest rate to begin with. And now they got a credit score that's 50 points lower. And now you got to go off of that credit score. And they're basically in a jiff with their interest rate going up a half a point to a point higher. Don't let it happen. Okay. It's 120 days, 4 months. Okay. Don't let anybody play games with your credit behind the scenes. If you have a credit monitoring service, look at it every month. See who's running your credit. You can tell, right? Something will, but you don't want to you don't want to get a phone call saying, you know what, Mr. Smith, I ran your credit. It went down 40 points. And they act like it's a nonchalant, no. Why did you run my credit? It was ran 30 days ago. It's good for 120 days. There should have been no reason to do that. Okay. Hard pull versus soft pull. Okay. A lot of people coming to me saying, I don't want my credit ran. I want you to run a soft pull instead of a hard pull. Why? Okay. Because a soft pull doesn't take any points off of my credit when you go to run it. A hard pull, and I made notes on this, could take up to 5 points off your credit score. Up to. Not meaning that it's guaranteed to take 5 points off of your credit score. It's up to 5 points on a hard inquiry when we go to run your credit on a hard pull. Okay. Now, if you have really good credit and you have on-time payments and you're a really good citizen, right? And you're a good person, you got, high credit scores. When you go to run the credit, the hard hit's probably going to be 1 or 2 points. The better your history is, the better your scores are. When you go to do the hard inquiry, it's going to be barely nothing, okay? The soft pull will be nothing. The only thing I don't like about the soft pull, and I know you'll probably, negotiate with me on this and say that I could be wrong, but I'm not wrong. Soft pull sometimes is not 100% accurate, okay? We run a soft pull and it may not be the score that we run when we go to do the hard pull. Okay. It could be a few points off, and a few points matters when it comes to your interest rate. You could be at a 720 credit score, and then I go on a soft pull, I could run you at a 718 credit score. Oh, I'm sorry, a 720 credit score on a soft pull. I run you on a hard pull and you're 718. We got a problem. That's 2 points less. And now your interest rate is worse because you're under a 720. This is why. Now, a lot of people will say, no, Alex, the soft pull is the same exact score as a hard pull. I beg to differ. I've seen things, right? And I see them all every day, all day doing this 24 hours a day, 7 days a week. I live and breathe this stuff. Sometimes it is 100%, but sometimes it isn't. So if you really want an accurate approval, okay, you really, really want to sleep good at night, knowing that Alex gave me an approval letter. I know it's solid. I can make an offer on a property tomorrow. Let's do the hard pull. You lose a few points. At least I can sleep, know that I got a deal that I can do coming up. Okay. Because the worst situation is if we go to run the hard pull after you find a house you like and all that, and then all of a sudden the score's not what it used to be, and then we have a problem. I've dropped this on the show before, but I'm going to drop it again. You can run your credit as many times as you want in a 30-day period if you're going for a mortgage, and it only counts as one inquiry. Remember that. And I said this on the show, I think 6 months ago. So why not drop it again? As many times as you want in a 30-day period, you can run your credit. Let's say Bank of America, Chase, Wells Fargo, Greentree, Movement, we all ran your credit in 1 month. Okay. And it was all shopping for a mortgage. You were shopping rates, you were shopping a pre-approval, you were shopping whatever you were shopping. Okay. Now you're worried. You're saying, everybody ran my credit this month. I don't want you to run my credit, Alex, because 6 other mortgage companies already ran it in the last 30 days. And my score probably went from 800 now to 700. That's untrue. The credit bureaus know that you're shopping for a mortgage because they see all these mortgage companies running your credit. So they're only going to ding you for one inquiry overall for that 30 days, no matter how many times mortgage companies run it. So rest assured that that's not going to happen, that you're going to get an inquiry on each one. Now, if you go over the 30 days and somebody runs it again, then yeah, it's going to be another inquiry. But that 30-day window, you can go crazy. I got in an argument with somebody earlier in the week because they called me and said, well, I ran them for an approval. I was doing a pre-approval. And, I called them and said, your credit score is like 680. Okay. And they said, what? Why is my credit score 680? What are you talking about? Well, how could that happen? I should be at a 780. 780. I said, well, no, you're actually at a 680. Like sometimes I wake people up, like they're shocked. Okay. Gets off the phone. I still did the pre-approval, sent him the letter. Obviously, the interest rate's not as good as what it would be at a 780. I wish he was at a 780. It would be great for me. But unfortunately, it was a 680. Calls me back a few days later and starts yelling at me on the phone saying that, the reason why it's a 680 is because you ran my credit. Had I done a soft pull, I wouldn't have lost any points. But because you ran my credit, Alex, it took me from a 780 to a 680. He's telling me that he lost 100 points off of an inquiry. Okay. 100. And then it's my fault. How would I take that? Right. So, and a guy who's doing this forever and listen, 100 points. Are you kidding me? An inquiry doesn't drop you 100 points. An inquiry drops you, again, up to 5 points max. And if you had a 780, it would have only dropped you maybe 1 or 2 points. There's no way that the inquiry that I did, and this is to the mortgage loan officers that defend themselves every day because people are very, right now they're extremely nervous about their credit. So they're going to blame you if it even drops a half a point. But no, a credit inquiry is not going to drop you 100 points. I had to really school this person on that would never have happened. So let's really dig into why it went from a 780 to 680. You know why it did? Because when I went through his credit, he made a late payment on a Macy's charge account. Macy's. He charged whatever they bought in their household. He made a 30-day late payment last month, and it had just hit his credit, literally, when I ran it. So when I ran it, I'm like, well, you got a 680. I still got an approval for you. No big deal. He's like, well, no, I should have had a 780. I sent him the credit report, and here we come to find he had a 30-day late payment on a Macy's account, and he lost 100 points on his score because one 30-day late, that fresh, kills you. It drops your credit score dramatically. People don't realize it. He was in fuego, called Macy's, blew them up. How could you put a 30-day late payment against me? I'm buying a house. Now I'm going to get a really bad interest rate. I blamed Alex. Now I found out it wasn't his fault. It was, and guess what? They honored taking off the 30-day late payment. They said that it was an oversight, that something happened with his mail or whatever it was, and they took off the 30-day late payment. I go to run the credit on a rapid rescore a week later, and here we are at the 780 that he had claimed he wanted. Things happen, guys, but you gotta trust your loan officer, knowing that a credit inquiry is not going to drop you 100 points. And then you got to trust your loan officer to say, yes, let's investigate the credit report. This is the reason why it's lower. He'll give you the steps. Call Macy's, tell them it was an accident. They take the late payment off, which is great. And then at that point, we got an approval. Okay, so that was my story of the week there, because it's a big one. But I think that every single approval that I'm getting right now, pre-approval that I'm getting, people are just very hung up on, soft pull versus hard pull. So, let's try not to get hung up on that. The less stress in this job, the better. I'm seeing a lot of credit reports locked up. Like, I'll go to run your credit and all three bureaus are frozen. Everybody's getting this program now where they freeze their credit scores, right? So they freeze Experian, they freeze TransUnion, they freeze Equifax, which is fine. I get it. Maybe you had a fraud on your credit. Somebody stole your credit card or your identity, and then they started charging up your credit. I get it. But you got to remember, we can't give you an approval unless those credit bureaus are unfrozen, because we have to see the scores. We can't take your word for it. Like, I've had people saying, well, my credit scores are frozen, but I have an 800 credit score. So take my word for it. Like, I'm good. No, it's not that you're good. Listen, I believe you. You look good, right? You might have nice clothes on, you nice family and all that, but that we don't just trust you, right? We don't trust anybody when it comes to a mortgage, because we're the ones that are lending you money. So we have to make sure that we feel good inside lending you money. If we're lending you $300,000, we want to see your credit report. So if you got to unfreeze your scores, you have to call Experian, call TransUnion, call Equifax, or some of these people have a click on their phone where they have the actual app or link. They hit the button on their phone and it unfreezes all three credit bureaus. And then from there, we can run the credit real quick. And listen, let's go back to the 120 days. If you unlock your credit scores and then you open all three bureaus, I jump in, I run your credit, right? I get all three credit scores. You can literally lock your credit right back up on the spot. I've had people on the phone who said, did you run it? Did you run it? I run it while they're on the phone, and then they lock it back up on the spot. So that if I tried to turn around and run it again, it's locked. Everything says frozen again. But I got the credit report that I wanted, and now it's good for 120 days, right? I can't jump back in there 30 days from now and try to run it again because it's going to be frozen. I'd have to go through the person to let them know that I'm running your credit again. I need you to unfreeze your credit bureaus. So I understand, but you gotta let the mortgage company run the credit, because we can't give you an honest opinion if you're approved or not unless we actually see your scores. We can't just take your word for it. Okay. All right. So I'm going to breathe there, because that was a big one, right? I can't believe I even have this much breath after yesterday. I'm still thawing out. So, all right, good. So that was a big one. All right. So a lot of people have cash right now. Okay. So a lot of people go and they get direct deposit into their bank accounts for their paycheck. Okay. So I get $5,000 paycheck. It gets direct deposited into my account every 2 weeks. Okay. Great. Then you go down to the bank and you pull the $5,000 out of your bank account, and you come home with the $5,000 cash and you put it into your dresser, right? In your bedroom, right? And then when you open up your dresser, you have stacks of money, right? All your paychecks from the last year are in there, but it's all cash, right? I feel like we're in Casino now, the movie, or Goodfellas, where it's like all cash, like the bundles of money that, that doesn't work, okay? That does not work when you're buying a house. Okay. You can't do that. Okay. Then you can't just say, well, Alex, what do you mean? I'll just go into my dresser, pull out the cash out of my dresser, put it into the bank. What do you need? $10,000, 20? I got $100,000 cash sitting in my thing from my paychecks for the last year that I took out of the account. That's a problem, right? How do we know that those came from your paychecks? We don't. Like, you could pull your paycheck from 6 months ago and say, well, I have proof that that was 6 months ago. That money, we don't know if that's the same money from your paycheck, right? You could have spent it, right? So you can't just turn around and say, I'm going to go dump $10,000 or $20,000 back into my bank account. That's a huge problem. It's happening more and more. Or you ask me, well, listen, I have some cash on the side I get every week. I'm going to start dumping little by little into my account, maybe 5,000 here, 3,000 there. No, they're going to question where the money came from. The whole thing is that we can't use cash. We can't verify where the cash came from. Okay. It's a problem because we're getting in fights with a lot of people. They're saying, I got the money. What do you care where it came from? I got the money. Okay. You don't need to know. I really don't care either. I don't care where, well, I got to do a job, right? And my job, because I'm licensed to do this job, and so as other loan officers that are in this business right now have to be licensed, we have to verify where the money came from. We have to make it make sense. We have to make it make sense for underwriting in order for them to approve your loan so that we can go to closing. Okay. You can't just sit there and say, well, either you used the cash or we got no deal. Then we got no deal. There's no negotiation. There's no, well, can you think about it? No, we can't think about it. Cash cannot be used unless it's verified. Okay. You could go now. I got probably people saying right now, well, I'm going to go with a no asset loan. Fine. You know what that means? We don't verify where the cash came from. We don't care. We don't care about anything. We don't verify your income. There's brokers out there right now that they don't care about where your income came from, where your assets came from. They don't care about anything. That's fine. You could get back at me like that and say, you know what? I got this other company saying that they don't care. They don't look at anything. Wonderful. Let me tell you the difference. Okay. You ready for the reality? I was giving you 6.5 on your interest rate on a 30-year fixed because you were able to verify where your assets were coming from and where your income was coming from. You got an awesome interest rate on a 30-year fixed in this market. Guess what? When you go to a broker and they don't verify anything, that's fine if that's what you got to do because you have no other choice. But your rate's going to be a lot higher. Okay. And what I mean by a lot higher, because in this day and age, everybody feels that 6.5 is super high. So when they come back to you and say it's 8.5 or 9, which is 2 points higher, and they're charging you points in order to get that deal, you're going to feel the difference. Okay. And that's just what it is. To me, we can figure out other ways. Why don't we set it up as, does your parents have money in their account that they could give to you as a gift? Right? They gift you some of the money and then you reimburse them with the cash that you have. There's ways around it. But you have to be honest with your loan officer up front and let them know that I'm dealing with cash, and just don't fight with them and say, well, why can't you use it? We can't use it because you can't verify where it came from. Okay. And like I said, there are other alternative options out there that you can go with, but those options may not be the best for you because your interest rate and terms on your loan may be a lot higher. Okay. Even $1,000 cash, they're going to ask where it came from. Even 1,000. Anything under 1,000 starts to get questionable, like $500 cash, a deposit you might get away with, or $800 or whatever it may be. But once you hit that $1,000 mark and higher, you better be prepared to tell them where the money came from, because it just doesn't pop up out of the sky. And I've had some of the best people that I deal with, even real estate agents, that they've been blindsided by, I can't use cash. And they're the ones who are in the street doing this every day. This is where financial literacy that I preach every week, we need more of it. We need more financial education to tell people that it's just not the way that things are done and what we can do in order to get your deal through. My job is to work it out. On the flip side, I've run into a lot of snags over the last 2 weeks, guys. A lot of snags on deals. There's a problem here. There's a problem there. This one is not verified. Income's messed up here. We just found out about this. I've learned that I can't stress out over every situation. My job is just to find a way around it. You're going to find companies that go MIA and they just disappear once there's a problem that comes up. They don't want to deal with it. You know what I mean? They want the cream of the crop. They just want you to be the nicest person of W-2 income. I make $100,000 a year. I got an 800 credit score and I'm doing 30% down and there's just no problems. I have to tell you, that is 1 out of 100 right now. Okay. Everybody has some type of little issue that's going on, whether it be income, assets, problem with the property, problem with the appraisal, problem with our concessions, problem with the seller, problem with the inspection, whatever it may be. I could go on all day. Okay. What I've learned is that I'm not going to stress out anymore about every little situation. I'm just going to try to find a way around it. And if you're willing to work with me as a realtor or as a seller or as a title company, whatever it may be, I'm not going to fight with you anymore. It used to be back in the day, I used to fight with everybody in 2005 and 6 and 7 and 8 and 10. I used to fight with people left and right. Well, yeah, it's not worth it now. The job now in this market is to find a solution to the problem. Okay. Find a solution without stressing out. Tell the person, listen, I don't have an answer for you right away, but I'm going to get back to you. Find a solution to the problem. Okay. Because the best loan officers out there are ones that really take it to heart when there's a problem. And I used to make myself sick. Like there would be a problem that popped up and I literally couldn't sleep for a couple of days. I just really got stressed out. And now I'm starting to learn as I get older into this business and more experienced, it's not worth that. Call and let's brainstorm how we can work around the problem. There's always a solution. There's always a way, whether it be a cosigner to be put on the loan, whether it be putting more money down, putting less money down, finding out that they had a second job that we didn't know about, finding out they had Social Security income that we weren't using. There's always solutions that can be worked out, okay? But if you stress out and you find that you have a company that's disappearing, no communication, they're just going MIA on you, you got to move on and find the person that's going to work with you and find a solution. If I go through the text messages on my phone of realtors that are saying that, this loan officer's rough. He's rough with all my clients. And if there's a problem, he fights with my clients right away. Okay. This other loan officer doesn't even give out his cell phone number. My clients try to get a hold of him and they got to go through email. He doesn't even give out his cell phone number. Like he must be independently wealthy or something, right? Because who as a loan officer doesn't give their cell phone number out in order for you to contact them? That's insane. You have to contact them. If I didn't give out myself, I'd live and die by this thing. If I didn't I even have it next to me right now. I'm even looking at emails and text messages as I'm doing the show. That's how crazy I am because you live and die by your cell phone, right? So these are the gripes that I'm getting. No cell phone. He only gives out his email. He fights with people. The other guy doesn't find any solutions. The other guy only cares about, the A people. How about the in-house loan officers? I'm not going to put you guys down because I have a lot of friends that are in-house loan officers that have been in the business a long time. The gripe that I'm hearing from realtors on the outside about in-house loan officers are they only tend to the realtors that are doing a lot of business. They only tend to the realtors that do a lot of volume. The smaller guys, the new realtors that get in, they don't even call our people back. We give them leads. We don't know anything for 3 days. We give them leads. We never hear from them again. They don't even speak to us. They don't even include us on the weekly emails of updates. They only include the top 20 realtors in that office. Guys, we got to do a better job, right? We got to do a better job because you know what? Even though I've been in the business a long time, I'm going to take those realtors and I'm going to work with them in your office. I'm going to steal them, right? They're going to work with me. And even though they might be brand new and don't have that big book of business and they aren't doing that big volume, in 2 or 3 years from now, when they build their business in one of the hardest markets ever, they're going to work with me because I worked with them when they were brand new and really didn't have anything to bring to the table other than just leads that they're throwing me. And they didn't really know if they were good or bad, but who cares? It takes me 30 seconds to run credit. It takes me a few minutes to really know that we have a deal here or not. And I just call the client and tell them what's going on and find a solution and hopefully get a pre-approval letter in their hands. But you got to do a better job in not just going for the top 20%. I'm not saying go for all the bottom feeders either, but go for the people that are actually working hard, whether they're new or experienced, and giving them a shot. Okay, so that's that. The final thing that I'm going to touch on is, so debt to income ratio. I have a lot of people that go on Google, I guess, right? Everybody's going on Google nowadays and they're telling me, what they're seeing. I got to laugh too. It's like, great. You went on Google, you call me, you're ready to school me. Okay. I don't even know you. Okay. You call me, you say, I want to do a pre-approval for a mortgage. I'm excited. You know what it is? I still get excited. Even on Saturday at 3:00 in the afternoon, I might be running around with my daughter doing volleyball, which I'm going to do today. And, I get a phone call from a person while I'm on the fly. I'm on the road somewhere. I'm sitting in the stands waiting for her thing to be done. And I'm taking calls or I'm taking emails and text messages because it never ends on the weekend because it's when we're the busiest. So I'll get somebody on the fly to say, hey, I want to get a pre-approval. Great. What are we looking to do? I found a $500,000 house. I want to put $100,000 down. I have great credit. I make $8,000 a month. Great. So what's the mortgage payment going to be? $6,000 a month on a $500,000 house. Great. And you make $8,000 a month. So $6,000 a month is going to go towards your mortgage payment. And then we only have $2,000 left over. Okay. That has to pay for your utilities, your food. You got to live, right? You got to eat. You got kids to pay for. You got schools to pay for. You got cars to pay for. Insurance, electricity bills are through the ceiling. Eggs are through the ceiling. Life is through the ceiling. Okay. You got to pay for everything, right? So how do you feel that only $2,000 left over a month is enough to pay? What if something goes wrong in your job and then you lose your job? What if something goes wrong and your cars break down and you got $1,000 bill out of nowhere? Okay. Things happen. What if something major goes wrong in the house? The heating system breaks and you got to get a whole new heater system and it's 0 degrees outside and you got to pay for it today. You can't wait till next month because you're going to freeze your ass off, excuse my French, and then you got a problem here, right? So then you start fighting with me about debt to income ratio. Well, what do you mean? My debt to income ratio should be really low. Let's give you the guideline on debt to income ratio. Okay. I schooled this guy and I don't mean by schooling. I sound cocky when I say that. I didn't school him. Told him the guideline. Okay. $8,000 a month, gross income. We're allowed to go to 50% of that. So what's 50% of 8,000? 4,000. Okay. $4,000 a month is what we're allowed to use to qualify you because you make 8,000, 50%. Okay. FHA or a VA loan may stretch it to 55 or 56%. They have. I'm not saying it's the best thing to stretch you to 55 or 56%, but sometimes it saves a deal if we need to. Okay. But conventionally 50 is the gold. Okay. Now you got an $800 a month Mercedes payment. You have $600 a month, credit card payments. You got, you're paying for your kids' school. So that's another, $500 a month. You have, utility bills that are through the roof right now, a cable bill that's $300 a month. You have, the list goes on, right? So now we go from $4,000 a month. Really, you're down to like $1,500 a month or $2,000 a month. Okay. How are we buying a $500,000 home when the payment is, $5,000 or $6,000 a month? It's not going to happen. This is where the golden rule is, take your gross income, right? It's before taxes. Now, a lot of people say to me, why would you do the debt to income ratio on gross and not net? I'm only taking home out of $8,000 a month. I'm only taking home $5,000. Why are you qualifying me off? Listen, I don't own the bank, right? I don't make the rules here. I just work here, right? My job, again, going back to my job is I'm licensed to follow the guidelines to get you to closing. But my job is to work with underwriting to make sure that I followed all the guidelines to get you to closing. Okay. So that's just what it is, right? Everything is based off of gross income, but we have to follow the 50% rule. If we don't follow the 50% rule, I'm going to set you up for disaster. I'm going to say, yeah, we could do it. And then you're going to go into underwriting and then they're going to see that I didn't do my debt to income ratio calculations correctly. And now you're no longer approved. So you may feel, well, I got 2 side jobs that are cash side jobs that are not verifiable. I don't pay taxes on 2 side jobs that I have. It's just cash coming in a month. Why can't you use that? I can't use income that you're not filing. Okay. You got to go file that income so that I can try to use it. And you got a history. You have to have a history of working that second or third job. I just can't say all of a sudden, well, you just filed the second job last month. And so can we use it? We need a history of you working 2 jobs at the same time. Okay. So, Now, we could go back to there's a lot of no income loans. You could go get a no income loan where they don't verify income, but your rate's going to be a lot higher. Okay. Your rate's going to be 9% instead of 7%, 8.5% instead of 6.5%. So there's a lot of differences that I see. So, just watch out for the debt to income ratio. It's going to bite you. Okay. That's all I got this week. You guys are great. I'm glad you listen every week. I see the views. I appreciate it. I'm going to get a guest on, to come on next weekend. We have a lot of realtors that are interested and want to do it. If you're listening right now and you want to come on the show, you can always message me and say, I'd love to come on. I would love to have you on. You know what it is? Scheduling is tough this time of the year, and the Eagles didn't help me. We're going to the playoffs and the championship every week, and now parades, and so now that the Eagles are done and we're into the spring season, I think that you're going to see a lot more guests come on. So if you're interested, let me know. If not, you'll just hear from me directly, which is fine because I could blow up every week with the information I'm giving you here. So I'm glad to hear from you guys, and I will see you next week. Thank you again, and talk to you soon.